So here's what actually happens mechanically when price push towards that cluster on the heat map. So all those shorts have their stop losses sitting just above current price, and the moment Bitcoin pushes past 68.5 with any real momentum, those stops starts firing. That means the buy orders are going to be forced into the market automatically. So the price accelerated to 69k, maybe 70k. We don't know where the next cluster is going to sit, and it's going to feel like a breakout, and the retail might pile in, and that might be where exactly the big guys are going to unload.
If you watched the past 2 videos and stayed patient through the brutal February, congratulations. Bitcoin squeezed all the way up to 69,000 and wiped out 463 million worth of short position in the process. But here's the thing, that was yesterday's story. Today's data is already telling us something different, and if you're just looking at the price and thinking we're back, you might be walking into the next trap. 2 things on the table today, the mechanics behind the squeeze and something Ethereum just announced that most people completely missed. So let's get into it. Here's what the data looks like right now. Total Bitcoin open interest, that's the total size of all active leverage bet, still sitting at 43.7 billion and is down 3% in the last 24 hours alone. Now we could tell that positions are being closed, not piled into. Funding rates have actually flipped negative, sitting at around minus 0.003%, meaning that if you're short on Bitcoin right now, you're actually paying the longs to stay in their positions. That's not what an aggressive short environment looks like. That's a market that's still uncertain about which direction to commit to. Now on the liquidation data side, this is the most important one. In the last 24 hours, 228 million in positions got wiped out. We're looking at 141 million in longs versus 86 million in short. The big short squeeze happened yesterday on the way up to 69,000, and today, some of the people who chased that move are already getting stopped out. Now the ETF flows came in at 254 million on February 26. That's 3 consecutive days of the net buying from institutional investor after weeks of outflow. And on the heat map, you can see 2 clear zones. There's a dense liquidity cluster sitting just above 70,000, and that's where a lot of short stop losses are stacked, and if price pushes up there, those get triggered and can accelerate the move. On the downside, there's a support zone around 66,000, and that's the level to watch if this move starts to fade. But the market hasn't committed to a new direction yet. OI is still falling, funding rate is flat to negative, and those longs who chased the squeeze are already getting cleaned up. Okay, so let me explain why this move happened, because the explanation going around social media could be a little bit off. Now the narrative is that the sentiment flipped, people got excited, Bitcoin pumped, and that's not really what happened mechanically. In my opinion, what actually happened is simpler. Going into this week, a huge number of traders were shorting Bitcoin, betting the price would keep falling after the worst February in 4 years. Now those positions built up over time, and there's a point where if the price moves against them even slightly, your position get automatically closed. So to close a short, it means that you have to buy. And when a lot of short closes at the same time, the buying pressures push the price up, which trigger more closures and also trigger more buying, and it compounds. Now that is not the same as real demand. Real demand is someone choosing to buy because they want to hold Bitcoin. Forced buying is someone choosing a bet that they already lost. The distinction matters because forced buying has a natural endpoint, meaning that once the shorts are gone, the engine's going to stop. 254 million came into Bitcoin ETF on February 26. Now we're talking about money choosing to come in, not money being forced out of a short position. Now 3 consecutive days of ETF inflows after weeks of outflow, that's a signal that's worth a little bit more attention. If that continues over the next few days, the structure starts to look different. If it was a one-time event and flows go quiet again, then this was just the squeeze running its course. Now yesterday we talked about ZachXBT dropping his insider trading report. Now I don't know if you remember the poly market bet. We were looking at a 5.6 million in bets. Meteor sitting at 43% odds. Now the actual target was Axiom Exchange, and nobody had them at the top of the list. The allegation is pretty simple. A senior employee named Brooks allegedly used Axiom internal customer support dashboard to look up private user wallet address. Now these are wallets that normal user thought were completely anonymous, and he used the information to trade ahead of them. In a recorded call, he allegedly described how to extract $200,000 by abusing that access. Now Axiom removed the internal tools and said that they'd investigate. Zach immediately flagged that this could fall under the SDNY jurisdiction, same federal court that handled FTX, so this one could have real legal consequences. Now the bigger point is, this is the same theme from the last video. Someone inside had access to data that regular user didn't, and allegedly used it. That's not one bad actor at one company. That's a pattern that exists across the industry over the past couple years. While all the Bitcoin noise was happening, Ethereum quietly dropped what might be their most ambitious technical plans ever. It's called the Strawmap. Before I explain what it is, let me say what it isn't. It's not a confirmation, and it's not a sign-off roadmap. It's a working draft. So Strawmap is basically a team saying that here's what we're aiming for, and that's pressure tested. Think of it like a company's long-term product plan. It's the target, not the guarantee. With that being said, here's why this is significant. Right now, when you make a transaction on Ethereum, it takes roughly 16 minutes for that transaction to be fully, irreversibly confirmed. The Strawmap targets getting that down to around 8 seconds. Think about what that means practically. If you're building a payment app or a financial product or literally anything that needs a confirmed transaction before the next step, 16 minutes is a big problem. Now, under 30-second changes what you can build, and it changes who would even consider building on Ethereum. The plan also targets 10,000 transactions per second on the base layer. Now that is a massive upgrade from the current level. In addition, a quantum resistant security is also going to be added, meaning that it would still work even if quantum computers get powerful enough to break the current encryption. While all these information were being dropped, the Ethereum Foundation started staking 70,000 ETH from its own treasury. When the people building something put their own money into it, that's a significant signal. It also means that ETH is being locked up and removed from circulations, which changes the supply picture. So on the surface, Ethereum is down roughly 50% from its August 2025 peak, pricing at around $2,000. A lot of people wrote it off this year, but underneath, the team published a 7-fork roadmap through 2029 and put their treasury into the network at the same time. Whether these two things ever meet, that's the open question, but the infrastructure work is definitely real. So 2 days ago, Fear and Greed Index is sitting at 11. Yesterday, Bitcoin touched 69K, 463 million in short got wrecked, and 3 consecutive days of ETF money came back in. But the longs who chased that move are already getting cleaned up, open interest is falling, funding rate is negative, and the market hasn't picked a side yet. So watch the ETF flows over the next 48 hours, watch whether the 70K liquidity zone gets taken out or acts as a resistance. The squeeze was absolutely real. Now what comes after it, that's the part nobody knows yet. Alright, that's what I have for you guys today. If you feel like I missed anything, feel free to drop a comment, and if you found this video helpful, make sure to drop a like and subscribe. I'll see you in the next one.